This video discusses the first vol hack widget called the quad screener. The quad screener is designed to show how the current dealer positioning would impact movement for any of our hundreds of equities in a simple, readable manner. This is the quad screener. The y-axis shows the volatility expectation of the underlying. This is measured by comparing the current total gamma exposure with the end-of-day gamma exposure over the past 6 months. The values are stochastic. 1 means to expect little volatility, and -1 means to expect a lot of volatility. Particularly in individual equities, aggregate gamma is typically in a tight range, so stocks can move quickly on the y-axis. Additionally, local gamma does have an impact, so to confirm the quad screener reading, I highly recommend checking the exposure charts to form a trading thesis. The x-axis shows the default directional bias of the stock based on dealer positioning. It is measured by comparing the current aggregate 1 to 30-day to expiration Vanna exposure with the 1 to 30-day to expiration Vanna exposure over the past 6 months. These readings need to be combined with a knowledge of the volatility plane and its impact on the underlying stock, as well as upcoming catalysts. To determine the strength of the reading, it is recommended that you check the exposure charts to identify key levels where Vanna will shift from its current position on the quad screener. With the averages being the lines in the middle, this cuts the box into 4 quadrants. The green quadrant means to expect measured upside compared with its recent movement, making it the most bullish quadrant. The blue quadrant means to expect volatility with an upside bias. While that could result in a breakout to the upside, it more readily means scary upside bias trading from customers buying calls. The orange quadrant means to expect a slow decline, while the red quadrant means to expect a more rapid volatile decline, making it the most bearish quadrant. This is my quad screener workplace. I utilize many different quad screeners, one for each sector that I care about, to see the distribution of stocks within the sector. It also helps show the relative position of underlying stocks to their associated ETFs. This is a great way to identify possible dispersion trades or risk management hedging to core positions. For instance, right now, I am looking here at the quad screener for my overall market and high market value stocks. Notice that SPY, QQQ, Microsoft, Meta, most of the stocks are in the orange quadrant, which signifies a slow decline. However, SPX is firmly in the blue quadrant, showing a bullish direction, but also a volatility index that is below the average. Google, on the other hand, seems to be very, very bearish. So this is a good way of planning dispersion trades in your portfolio. As another example, over here, I am looking at my pharmaceutical quad screener. Notice that all of the medical device products are in the bullish side, but all of the actual pharmaceutical companies are on the bearish side. This is also very good for helping you with your dispersion trades in the pharmaceutical space. The quad screener is meant to give initial trade ideas and should not be construed alone as investment advice or to determine a trade thesis. Indeed, gamma can be very low, but not cause volatile conditions when a lot of net premiums have already been collected. Vanna can be very low, but be in the middle of a low gamma sell-off that can create whipsaw in both directions. In short, the quad screener should not be a sole basis of any trade plan, but can help identify potential ideas. Thank you for watching, and may Volland help you in your future trading ventures.